Yo, hey, what's going on? Good morning. I hope everyone had a good long weekend. I'm going to do a quick review, high level overview of what's going on and the trade I took this morning. Again, this is not financial advice. I'm just going over my own experience and what's working for me. So let's look at the higher time frame real quick. All right. So we're on the 1 hour time frame. And previously, I had mentioned, we had taken previous month's high, so I was eyeballing previous month's low here. Um, so right now, we currently have a huge SMT up here. Let me, all right, so we have these highs here that were taken. These highs here were already taken by ES. So we have this huge SMT. And then um, right here, I wanted us to respect this previous week's low and use it to target these lows at least. This morning we took them. What I'm eyeballing next possibly would be this low down here. This is what I'm looking at. And I'm going to show you how order flow starts changing and whatnot. I was eyeballing these. I wanted to target these lows. When look for this low, and final, I'm going to look for this low, and then after that, I'll come up with a different game plan. So here we had bearish order flow from here all the way down to here, right? This was all bearish order flow on the higher time frame. On the hourly time frame, this is bearish order flow, and then here we had bullish order flow. So this is all bullish order flow. And what I was looking to stay below pretty much here, right? If we stayed below here, I wanted to target these lows on the higher time frame. We created a huge SMT with ES, and as long as pretty much we were above this fair value gap, you can look for longs. So whenever we created this SMT up here, when we created this SMT, you always got to look at the left side of the curve, okay? So look at the left side. So whenever we started closing here, you see how we start disrespecting that? Then now I know the order flow changed. So what am I looking for now? I want us to start respecting other PDRAs, right? So we have this. I want us to start respecting these, looking for sell side, right? What's low hanging fruit on the hourly? These are low hanging fruits on the hourly, right? So if you're, I didn't trade yesterday; it's a bank holiday. But if you're looking for sales, you retrace and then you look for low hanging fruit. These are low hanging fruits. There's more low hanging fruits here. So this morning, originally I was looking for sell side right here, right? But over the weekend, we were already disrespecting so many of these PD arrays, right? So this is telling me that we're going to be hunting sell side. We start closing below this, I know we're going to go look for sell side. So whenever I hopped on the screen this morning, we had already taken sell side. So whenever you take major sell side liquidity, expect a retracement, right? Um, so I see that we start retracing. I'm going to target a high or a session high or a previous 90-minute cycle high. And that's when I start looking for my entries. So remember at the other video on how market maker models work, I have a kind of like an instructional on what I look for on a high level. So always remember that the market moves from internal liquidity to external liquidity, right? So this is external liquidity that was already taken. So I'm going to look for internal liquidity. And then how could you have possibly caught a short, right? So we retrace, we take internal liquidity. And what's external liquidity? External liquidity is now this low, right? So we take internal liquidity, we come, and now we're going to target this low for external liquidity. We take this external liquidity, we retrace to target internal liquidity, right? Look at this. These hourly highs, this is internal liquidity, right? So we're going to zoom in on the 1 minute time frame. So this low is external liquidity. What did I look for this morning? I looked for a high internal liquidity. So you see all this? This is all consolidation, right? But if I know we had a market structure shift, CSD or breaker structure, whatever you want to call it, right? On the lower time frame, I want to target a high. Why did I target this high? This high is a previous 90-minute cycle, right? So this is my low hanging fruit. My low hanging fruit. Um, I look for the time of interest. So this is my golden window right here, right? 9:45 to 10:15. Most of the time, you're always going to catch a move around this time, right? If there's already a market structure shift that already happened, which you can see here, there was already a market structure shift. CSZ had already happened before the window, right? This is CSD right here. Right here, this is CSD. Okay. I'm going to change this to yellow. So this is CSD right here. There's three forms of CSD. This is the early way of catching it right here. You could have caught it right here. I don't enter until my time of interest. So you could have caught it here. If you didn't catch it there at the order block, you can catch it here. Inverse fair value gap. Right there, you could caught another entry. That's an inverse fair value gap. Right here, this is your breaker. You could have, as soon as it retraced, you see how it comes? It retraces back into your breaker. You could have caught a long right there too. It's not during my time of interest. I wait till at least 9:42. This is my execution right there, 9:42. And then like I said, you always look at the left side of the curve, right? So I was using these order blocks right here. I use this high because if why why so you see these highs, we already had our market structure shift, right? After taking these red lines here on the higher time frame, this is major sell side liquidity. So I'm expecting us to come up and rebalance, right? To rebalance and take some form of liquidity, which this is the high that I'm looking at. My analysis right now is telling me that that the algo shifted into a buy program, right? So if we shifted into a buy program, we should respect anything on the left side of the curve until the objective, the other opposite liquidity has already been taken, okay? So here, as soon as we come, we retrace, I take my long entry, all right? Take my long entry, my stop loss was right here. below these lows. I took a partial somewhere right here. Then I took another partial right there, and then I targeted the previous 90-minute cycle high. That was my full TP right there. So whenever 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 I take partials, I go break even, right? Because we shouldn't need to go back down here. So look at this right here, right? Because sometimes people miss their entries because they think that we're going to come back down here. These are breakaway gaps, okay? So during this time of interest, if you had, let's say, a limit order right there, but we already closed above here, we may not go down here anymore, okay? Because the algo is already in a buy program and it's going to be in a rush to take liquidity. So you are not going to get tagged here. This is going to be a breakaway gap. So I hope that answers some questions why sometimes we leave stuff behind. Whenever it goes into a buy program, it doesn't need, and it starts closing above other PDRAs over here. Like if we already closed above here, we may not go down here. I mean, it come tag it and then it take off again, but there might be a high probability where it may not come down here. Um, and then I wouldn't even wait. Like if this is already all the way up here and it took this form of liquidity, I wouldn't have an entry anymore over here because now you're just going to get stopped out. See, like there's some people that wait for these. I used to be one of them, so I mean, I'm just telling you by experience. I wouldn't be waiting for something like this because then you're going to be like, okay, I'm going to take these highs and then it's going to come and stop you out, and then you're going to be like, well, why am I getting stopped out? I mean, you got to understand the higher time frame. It's just a lot of time of studying, to be honest. But I mean, don't give up. You'll get there. Yeah, and then I mean, this would have been a good short too. I wasn't after I took my profits. I'm done for the day. Okay, I don't care about what the market does. You're gonna get these moves almost every day. Okay, look what happens here. Previous this 90-minute cycle. This green one here is a 90-minute cycle. This is the 10 o'clock. It comes. It takes this 90-minute cycle. It takes this 90-minute cycle. Right. You wait for another time of interest. Right here's another time of interest. Right. So this that way we don't get confused. Let me erase this one here. So we already took these 90-minute cycles. Now start looking for shorts. We close below these lows here. Start looking for some. I mean, you have to look to see if there's any type of form of SMTs. You can catch a short right here. Catch a short. Target the lows. You see? Why would I look for shorts? Is because we're bearish, right? If you were here within this time of interest, right, you would look for shorts. Why would you look for shorts? Well, let's zoom out again, right? Let's zoom out that way you can understand, right? So let's go back to the hourly time frame, right? So we're bearish, right? We look for internal liquidity. So we're gonna come here. This candle here retraces. We go up. We take internal liquidity. What's the next move? External liquidity, right? So we take internal liquidity, look for a time of interest, look for SMT, look for CSD. What's the external? This low. Let's zoom in. This is the hourly, right? Look at this low. We take internal liquidity. We look for shorts somewhere right here. Time of interest, SMT. And it looks like there is SMT, right? There, I use this SMT indicator. Um, Look for this low. Boom. You get your 1 to 2 or whatever you like trading. So, um, yeah, I mean, leave some comments, questions, whatever you have, and I'll go over it. Have a good one.